welcome back to the Ultimate Trader Workshop. In this video right here, we're getting right back to work. We're done with our 500 subscriber celebration, so let's get back to work. So this one's going to be purely technical, working and training our reticular, identifying patterns, identifying confluence, and we're going to break down some definitions. So this is going to be a pretty powerful video. This one is going to be power packed with a lot of great information. So be sure to hit the like button. Go ahead and hit the like button right now. This one, you're going to want to hang around for this one until the end, because this is going to have multiple patterns in it that are identified, as well as a potential trading opportunity. Of course, trade your capital at your own risk. This is not a trade signal. We're breaking down the way that we see the market technically. So let's go for it. So there are a couple of things in here that I said that pop out and stand out. There are three powerful patterns right inside of here. I know to the naked eye, it doesn't look like much, but to the trained reticular, there's a lot going on here. So we're going to talk about some of the stages. Okay, this is why you need to hang around. Okay, be patient. We're going to talk about some of the stages because that's education in its own right. And then we're going to get into the pattern recognition part. So the first thing I want to do in this video, remember, this is a turning point video. This isn't your standard Harmonic Trading Club video. This is a turning point. This is a higher level up. Okay, so remember, in times past, or the average retail trader, they would consider this part consolidation. On the upper levels of trading, this is called accumulation. You guys have probably heard me using that term a lot lately, accumulation, because that's what's going to lead to your move. And you don't really get your move until you get your conviction. So you got accumulation first, and then you get conviction. Okay, that's the big engulfing candle. Conviction, that's the volume that you want. Okay, and then you get confirmation. Okay, that's when you get the break and close out, taking out all these levels here. Okay, so this is, you don't get the confirmation yet, you get it here. Okay, and then that crowd push, that conviction, is what carries the trade to the top. Okay, at that point, remember, we're just doing some definitions. So we did accumulation, we did conviction, we did confirmation, crowd, and push. Notice how many new terms we're using. Remember, because this is turning point. Okay, at that point, once the trade is complete or exhausted, the sellers need to get out the way. They're going to start selling their positions, whether this is a stock, a crypto, an ETF, it doesn't matter. Okay, a foreign exchange pair. In this case right here, this is NZD-USD. The people who were long NZD, right, they're going to a stage of distribution. Okay, so you got accumulation. Okay, you got your push, and then that's distribution. See, new term. So that's the distributing phase, because now they're selling. They already won. They got out. They got out the way, end of the trade. They'll probably allow this thing to come back, correct, outside return or retracement. Fine structure. We're going to get into the technicals in a second, but I wanted to go ahead and make this part of it that's very important, that you start looking at things this way in terms of like accumulation, distribution, confirmation, distribution, things of that sort. So once we've completed all of those stages, then all the other magic starts happening. Okay, structure obviously was created here at the bottom. Okay, in the form of a double bottom. Okay, in the form of a double bottom. If you notice, you see these this little tweezer-like, see these little needles down here? You see this tweezer-like action, okay? So this double bottom is actually what started and caused all of this stuff, okay? And then boom, into the double bottom play. I could go a little further, and I could go ahead and get a target off a retracement to that too if I wanted to. And I'll do it because this is a very technical class. I'm going to have to take my time. I like to get in and out of these quickly for you guys, but there's always so much. You know, when you look at when you understand how to look at the market technically and what's happening harmonically, things just move different to you. So starting from the swing high up here, because we want to talk about this point where the distribution took place at, and that'll help you understand the reason why. I'm sorry, guys, it's a very technical class, but hey, that's what we do here. We're teaching market structure the right way. Okay, so from the swing high, double bottom, and then break and close up here. Okay, right to, of course, 618 golden ratio. Okay, this is a master class, so guys, watch it as many times as you need. This class right here probably has more information than most videos have on them, period. Okay, so swing high to swing low, retest there, break out. During the accumulation phase, those traders come in, they win, they get out. That causes the distribution after the accumulation and the ride up. And it happened to stop and do that and be almost overbought with some bearish divergence at the 618. I had to go do that to explain why we went through the phase of distribution. With that being said, I'm going to clean up because we're going to start on all the technicals. Okay. Okay, we're going to start on the technicals. During that distribution phase, something else happened. This is why you have to get those eyes trained, because you don't see what has happened yet until you get there. And what has happened is one of the most powerful harmonic patterns, the A to B is equal to CD pattern. So all of that stuff started A to B being equal to C and D, equal measure move. Okay, and at the end of that, I'm going to copy it. It's a cloning the leg to make the equal measure move and put it on C. A to B is equal to CD pattern, okay? Filled and completed, all right? So we'll go ahead and line it off. Okay? So we completed an A to B is equal to CD pattern, which is, of course, is a counter trend opportunity to trade this back up to the upside. So that's where the trading opportunity is likely to come from. Nothing is confirmed yet. We'll talk about confirmation because there's going to be another level about accumulation on this side. So there was accumulation on this side over here before the breakout. There was accumulation here, and I'm going to soon talk about the accumulation that's on this end where the trading opportunity is starting to build. That's if it comes to fruition. Okay, A to B is equal to CD pattern is complete and filled right here. It's going to let the traders know. It's going to put you on alert. I can start to get ready. Not go. It doesn't mean, oh, it's filled, go. That's the old school way. That's wrong. Or having a sell limit order here. Or just saying, well, that's good enough, go. No, you need confirmation. You need to allow the accumulation stage or phase complete, and then you need to get confirmation. You guys already know where we're going to go on the confirmation. That's going to be in the form of a 3-bar reversal. Okay. I don't want to talk about the 3-bar reversal because I don't want to talk about entry yet. I still want to talk about the opportunity. We're going to layer this A to B is equal to CD pattern that's complete with another trading technique that's just as powerful. And a lot of you, if you've been watching these videos, you probably are aware of the 2618 technique, okay? Remember I talked about that double bottom, okay? So down here, so in 2618, the 2 in 2618 meaning double bottom, 618 meaning 618 retracement. This time it's going to be to the downside. I talked about the 618 retracement from the swing high to the swing low, where the distribution started taking place. Now we're going to talk about 618 on the other side. Okay, so Fibonacci retracement, swing low to swing high, and what do you know? Price just wants a 618. Okay, wants a 618 retracement. So we're stacking two very powerful technicals, right? A to B is equal to CD pattern combined with the 2618 technique, all right? So you got two very powerful weapons at your disposal, confluent with each other, lining up with each other in the exact same spot. To be honest with you, this is one of the more powerful opportunities that you're going to see in the market. I only hope that it plays out and I get the type of confirmation we want for entry. So let's start talking about entry now that we know that we're dealing with at least two technicals before we talk about the third pattern, okay? So as I was alluding to a few moments ago, you want confirmation. You want the strongest form of confirmation. The strongest form of confirmation is going to be the 3-bar reversal or the trade 3BR. So let's talk about it real quick, okay? Very, very clean right in front of you. That's why your eyes have to train so you stop missing these types of things. Bearish engulfing candle followed by doji. This one is not too bad. You got upper and lower shadow. Your body's not too bad, but this is a doji. Bearish engulfing candle followed by doji followed by trigger and entry candle. That's the third one, trigger and entry. And then a 3-bar reversal, okay? Your trigger and entry candle just needs to close beyond the doji, beyond the wick. You need to take that out. Currently, so we're on the weekly chart and we're on Thursday. So by the end of the week, meaning by the end of Friday, if your trigger and entry candle, okay, here, closes beyond the doji, then you have, ta-da, you have confirmation. And this is why trading less is more. This is why you have to wait for confirmation. This is why you have to understand accumulation, because that candle right there for that week, you see it pushing up. It's building. It's the accumulation. But once this closes Friday, if it's not above that, you have to scrap the whole entire trade. You can continue to keep your eyes on it and see if another 3-bar reversal comes later. That's going to say, okay, we're still in the same place. We didn't get it right there, but here's another one later on, and use that for entry. But in the case of a true 3-bar reversal, if that weekly candle, Friday, when the market closes tomorrow at 2 p.m., if it's not above that doji, you don't have a 3-bar, you need to wait. You need to be patient. Go find something else to do. If it does, on Sunday, you can enter. Okay? So let's talk about targets, since now we've broken down the entry on the possibility. On a trade like this, okay, and momentum to the upside already established. I didn't say the trend has changed, but there's momentum to the upside, double bottom, break and close, 618. You would typically be looking to go retest that high, okay? And then you would be looking for extended highs after it, okay? Your extended highs would be from the low of the double bottom to the high. And typically you want the 2618. So Fibonacci extension tool, from low to high, and looking for that 127. So that's target 2. Now, the way that the whole thing works, okay, I'm going to put it all together. Once you get your confirmation, okay, meaning on Sunday, you're just going to test the water if this works for you. On Sunday, you wouldn't just come, help, my God, this is too good, I'm going to load up. You would test the water with a very small position size. Once the next week closes, okay, then you would bring on the rest of the position size, okay? And then you will continue to compound and stack those same amount of positions. One, when you cross this level of structure here, which is the B leg, okay, you'd add another position size. So now you're 3 positions in. You'd add another one after you cross the high up here, the retest, okay? And you would even add another one when you get to the final target. So you're riding 5 positions up there instead of 1 or 2, or being scared like the market's going to come get you and you need to pull your stuff back when you need to be buying into that type of momentum as it's pushing. Okay? This is turning point, people. Hope you're getting this. So let's take a look. We're not even done with this. Let's take a look and see what it would look like in terms of risk versus reward. Now that we know what the entry looks like, we know what the target looks like, we know how we're going to stack and pyramid and continue to add on to our positions, or add multiple positions as we're riding. And that there's going to be another, if this happens like this, remember I talked about the crowd and conviction, they're pushing. They're pushing. So we want to go with that. That's what we want to get in that, okay? Instead of being so scared all the time and trying to pull back, especially when you have a setup like this. So finally, let's talk about, let's say it does close right above the doji. Let's say we close right above the doji. And our target, we know we're going to be riding this out for a little while. It's a weekly chart, so it's going to be several weeks. And if it works, you're going to be very happy. Stops right below the doji, meaning if you come down there and invalidate us and take us out, okay, fine. We had to pay the price for that. This results in almost 6-to-1 risk versus reward on this trade, okay? This is how the real wealthy, successful traders do it. Everything that I broke down to you, this is what they're doing. They're not doing this little jump in and out every day. They're not doing all of this scalping. They're not sitting there staring at a chart. They're going to look at something like this, get confirmation, boom, get in there and go and find out what happens in a few days or a few weeks. The only time they're going to come back is when it's time to come see, hey, do I add another standard lot? Do I add another standard lot? Do I add another standard lot, or another mini lot, or a micro lot, whatever it is? That's how this goes, okay? Remember, I'm here to show you guys the right way that the market goes. So trading opportunity is beautiful, but that's still not the end of the story. Okay, so we got entry, stops, and targets. Beautiful thing if it works out like that. Remember, let's say the market does come against us, bow, zaps us out, takes us out. Be a little upset. It's actually not the end of the world, because something else very powerful is happening. So I'm going to clean up one more time. I have to, because we keep clean charts around here. So what's happening is one of the other powerful advanced patterns is in here too. That's your impulse leg, X to A. Come down here for B, right at 50% on the dot. Come up here to C, and then come down here, 886 D leg, okay? 886 D leg. So if our 3-bar reversal fails, okay, which right now looks like it's pretty good, but let's say it comes down and fails, and takes us out, our stop was going to be right up under this doji. Okay, no problem. You're going to get another opportunity to take another shot. Let me say something. Let me say something real quick about the A to B is equal to CD pattern 2618 opportunity. I forgot one of the filters on here, and that is this bullish divergence right here. Okay, so where it looks like price action has been falling down, RSI momentum says no, actually we're picking up steam to the upside. So bullish divergence, that helped with the score. So you had A to B is equal to CD pattern plus 2618 plus 3-bar reversal setting up plus bullish divergence. We're going to add all those things together for a very high combined technical score. Okay, and then like I said, worst case scenario is, let's say price action goes crazy. Let's say it's a terrible fundamental, okay, where NZD drops, meaning dollars going up, okay, drops and takes us out. It would take good USD news for that to happen, a good USD macro or fundamental for that to happen. And we got taken out. Okay, so once the BAT pattern, once price action gets down here, you simply rinse and repeat. You try to hope that price action came down and filled the BAT pattern with an engulfing candle, followed by a doji. See if I can draw a line through him. Okay, whatever. Followed by trigger and entry. So you get a second opportunity, even if you lose. Okay, you're not going to be happy, but it's not going to kill you. All right. So you'd be looking for the BAT pattern filled, but you don't want to just jump in because the BAT pattern is filled. I can understand there's some aggressive traders out there who just really don't care. I'm telling you, you want the best of the best. You want to filter out your trades. You want to have some level of confirmation. There's no stronger level of confirmation than a 3-bar reversal. So when a BAT pattern fills, you're going to look for the engulfing candle to fill it, followed by doji, followed by trigger and entry. And then you would be doing the same thing, trading up out of this BAT pattern with the same targets, which are very extreme. Remember, they were up here. You could even consider a test. At this point, you might as well consider your target retesting this price action up here, okay? And again, if we do that, okay, we don't know where that would be. This is hypothetically speaking. I had to jump way off into the future. We are depending on our A to B is equal to CD 2618 to work. But if it doesn't, the contingency plan, I'll say, would look like whenever this A to B is equal, 3-bar reversal would complete, it would look something like, stops up under it. And then it would say, okay, I'm still shooting for the stars because we know that structure is up there, market respect structure. In this case, you got your 5.93 again. You got your same risk versus reward, almost 6-1 again, but you would just be coming to take a second shot. Hopefully that's not the case if this is something that we can take advantage of. So a lot of stuff went into here. We got A to B is equal to CD pattern. We got 2618. We did some BATs, some 3-bar reversals, some Fibonacci, advanced Fibonacci, some targeting, some RSI, some CTS, combined technical scoring. I told you this one's going to be packed with a lot. We got to talk about accumulation so we can stop calling it consolidation, because even inside of consolidation, something is still happening. A decision is being made. It just hasn't been made yet. And then you will know once it's made. That will stick out to you like a sore thumb. And then once that decision is over, the distribution phase is going to start and start the cycle all over again. Okay, so if you want to know more about all this stuff that we talked about, all of that stuff, you can find it in any of our amazing playlists: the Harmonic Trading Academy, the Ultimate Trader Workshop, Turning Point, or from the charts. Okay, you guys know where to go. Hit the like button. Okay, if this one brought some value to you, subscribe to the channel. If you're not subscribed, hit the bell icon so you can be notified when the most amazing videos on trading the financial markets come out. That being said, you guys be good. Take care of yourself, and I'll see you in the next video.